Hey, good morning, everybody. Today is Thursday, November 12th, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. Stocks closed lower Wednesday on lighter Veterans Day holiday trading volume. The S&P 500 closed below trendline support, and the Russell 2000, which Friday bettered a key resistance level but failed on Monday, remains below that key level. On the New York Stock Exchange, declining issues topped advancers by a 4-3 margin yesterday. New lows bettered new highs. Small capitalization stocks outperformed large, although for now, large caps continue to outperform on a 10-day moving average basis. Our market timing model for both the NASDAQ and the S&P 500 remains on a buy signal, indicating that aggressive traders should maintain current margin levels and let your trailing stops take you out of your current positions. More conservative traders can continue to redeploy capital on the long side, keeping stops in place. The O'Neill market timing model is indicating a confirmed uptrend in the market. Distribution's been a concern, but much of the distribution is aging and is beginning to fall off of our count. Distribution's no longer relevant after a month and is removed from our totals. According to my count, we currently have 6 distribution days on both the NASDAQ and the S&P 500 in the past month. Investors Business Daily, which keeps a more sophisticated tally, has the distribution count at a much more bull-friendly 3 for the NASDAQ and 4 for the S&P 500. Distribution's a sign of institutional selling in the market, and too much distribution over a short period of time can indicate that an uptrend is in trouble. For now, all of our timing models are bullish. We're now over a month into the confirmed uptrend. Traders should be fully invested or nearly so, keeping your stops in place and being sure to follow your written sell rules. If you'd like some help with your portfolio management or with your written rule set, please feel free to contact me. My contact information's on the homepage. Let's start off by taking a quick look at the Russell 2000 today. As we've been noting, the Russell 2000 broke out of this downtrend back here on this bar, but has been struggling with resistance up here in the 1194 area. We broke above that area right here. That was last Friday, but immediately fell back below that on Monday, and we continue to struggle with that level. I'm not going to feel comfortable that this market's going significantly higher until we can take out resistance on the Russell 2000 in the 1194 area. Let's see what the NASDAQ Composite's up to. NASDAQ yesterday was down 16.22 points or 0.32%. Market closed right at the low for the day, which is a little bit less bullish. Notice how we've tested this resistance level up in the 5164 area right here, and we failed. We seem to be holding trendline resistance right here. This trend line is our 2009 to August trend line, and that trend line represents support for the NASDAQ for the time being. We continue to squeeze the NASDAQ between this support level and this resistance level. Eventually it's going to break out one way or the other. If we break to the downside, I would expect that the market will continue lower and test this resistance level down here in the 4900 area. If we break out to the upside, I would expect the market to go on to make new highs. Yesterday, the NASDAQ closed at 5067. Trading volume was very light as the Veterans Day holiday kept traders away from their trading desks. For you followers of William O'Neill, we are in a confirmed uptrend on the NASDAQ. We have been since October 2nd. We have 6 distribution days according to my count in the past month. Investors Business Daily, which keeps a more sophisticated tally, no longer counts these days, and so they have only 3 distribution days in the past month. That's a little bit more bull-friendly. Our market timing model on the NASDAQ is on a buy rating, which indicates that aggressive traders should maintain current margin levels and let their trailing stops take them out of current positions. More conservative traders can continue to redeploy capital on the long side, keeping stops in place. Just a quick note. We show in green the 10-day simple moving average of the NASDAQ composite. Yesterday, it doesn't look like it, but that moving average turned negative. In other words, it's now trending downward. That's the first shot across the bow of the bull market. So we'll have to keep an eye on that and see if the NASDAQ can recapture that level and drag that 10-day moving average higher. Let's take a look at what the S&P 500's up to. S&P yesterday was down 6.71 points or 0.32%. The S&P, after having recaptured its 2009 to August trend line, has failed and fallen below that level. That level now represents resistance, and I would say support, at least immediate term support, is right here at the 200-day moving average. Below that, we have support down here in the 2044 area. The S&P closed at 2075 yesterday, and like the NASDAQ, trading volume was very low on the S&P. We are in a confirmed uptrend on the S&P, and I am showing 6 distribution days. IBD doesn't count these 2 days, and so the IBD count is only 4 distribution days, a little bit more bullish. Our market timing model is showing a buy signal on the S&P 500, but like the NASDAQ, it's hard to see here, but this green 10-day simple moving average has turned downward. In order for our timing model to go to a sell signal, we have to have a downward trending 10-day moving average, a downward trending 21-day exponential moving average, which we show in pink here, and the S&P 500 would have to trade at least 1% below that 21-day exponential moving average. So we're a long way from a don't buy signal, but we have seen the first shot across the bow with the downward trending 10-day simple moving average. A couple of stocks I want to take a look at, both Chinese stocks. First stock is NetEase Incorporated. NetEase is a Chinese provider of interactive online gaming, internet portal, and wireless value-added services. NetEase has been in a second stage base with a pivot point in the 154.88 area. But you could call this a goofy little double bottom, which would give us a pivot point of 154.52. In addition to that, we have this trend line, which gives us an even lower buy point for NetEase. A break above this trend line would be a good place to buy the stock for investors, for traders that were interested in buying NetEase. NetEase gets a 72% checklist rating, and yesterday, trading volume was higher than any down day in the past 10 trading sessions, which is our definition of a pocket pivot, and so NetEase can be bought here on the pocket pivot. If it was me, I would wait at least for NetEase to break above this trend line before pulling the trigger on the stock. But there are all kinds of opportunities to buy NetEase at this point, and it may be worth taking a look at. And the last stock I want to take a look at is TAL Education Group. TAL is a Chinese provider of K-12 after-school tutoring services for 1.5 million students via 289 learning centers in 19 Chinese cities. TAL put in this 4th stage cup and handle base that started back in September of last year. It's a 4th stage base, and after it broke out of that base right here, it went on to fail and has put in a second 4th stage base on base formation. TAL gets an 80% checklist rating. It broke out of this cup and handle base right here earlier this week, and then broke out of this consolidation base right here at $39.26 yesterday. Trading volume has been impressive, and with an 80% checklist rating, TAL may be worth a look. Just a note, when you get this type of year-long base-on-base formation, it has a tendency to mitigate a later stage base. I'm not really concerned that this is such a late stage base. A fourth stage base is a pretty late stage base. But I'm not as concerned about it being a fourth stage base as I would have been had we taken a more direct route to the fourth stage base than having this base-on-base formation. I don't know if that makes any sense to anybody. It makes sense to me. TAL is worth a look by aggressive traders. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.